those are all things that, we're trying to help with at MicroAcquire, is really just taking that process and just streamlining it. So it's kind of like a step one, step two, find your buyer, gather LOIs, move into due diligence, sign a stock purchase agreement or asset purchase agreement, transferring of assets, escrow, and then close. And then there's 1,000 other ways to do that, but I think the more that we're able to streamline it, will just make the process easier for both buyers and sellers.
Welcome, everybody. I'm Mark Peter Davis, managing partner of Interplay. On this podcast, I interview innovators about their strategies, industries, and decisions. This week, I chat with Andrew Gazdecki, the founder and CEO of MicroAcquire. MicroAcquire is a marketplace that helps software companies match with interested buyers. Now, Andrew is a serial entrepreneur with a clear passion for startups, which is something I obviously love. We bond on that. And after selling his last company, he's been on a mission to help founders sell their companies more easily. He's made a ton of progress, and a significant number of founders are selling their companies through MicroAcquire already. We go well beyond MicroAcquire in this convo. We discuss Andrew's tips for being a solo founder. We also dove deep into how to sell your company. We covered the M&A process, market dynamics around M&A, and Andrew shared his key tips for selling your business. Enjoy. This episode is brought to you by Thunder. Thunder is a platform that is democratizing access to capital. The company believes fundraising should be about who you are and what you've built, not just about who you know. Founders can create a free account and add their company information, and then match with relevant investors. Investors can create free profiles and provide their investment criteria, ensuring that they only receive relevant deal flow. By utilizing a double opt-in matching protocol, Thunder avoids the spam, only connecting investors and entrepreneurs that should be introduced. Visit thunder.vc to create your free account while the company is in beta. Andrew, thanks for being here, man.
Yeah, Mark, thanks for having me. Super excited.
Cool. Let's start off. You want to give us an overview of MicroAcquire?
Yeah. So MicroAcquire is one of the largest startup acquisition marketplaces in the world today. The way it works is we help mostly profitable software companies get acquired without some of the typical headaches you see today. Zero commissions, 150,000 registered buyers, 600 plus acquisitions, and I believe we're around about $500 million in terms of GMV on the marketplace. And just really trying to democratize acquisitions for the software industry.
When you're saying democratize, what's the barrier you're breaking down?
Well, for a lot of people, acquisitions are kind of a mystery. There's kind of an industry quote where, an investment banker's job, 90% of it is just educating a founder on how to sell their business. And really what we're trying to do is, really bring education and content around how to actually get acquired. Because you have books on marketing, you have books on fundraising, you have books on social media stuff, but there's nothing about, arguably the most important part of the founder's journey, which is the exit. And this kind of came to me personally where, I had sold a business, and as soon as I did, I had, 6 friends reach out to me, and they're like, how'd you find the buyer? What was due diligence like? What was the legal process? All this stuff. And I was like, I didn't know going into it. So for me, it's like a life-changing moment. For the other person on the other side of the table, it's Tuesday. So, I felt there was a huge opportunity to really, level the playing field. So when founders go to sell their business, they're kind of, equally matched with the buyer in terms of education and tools and resources needed to maximize their exit.
What's the process someone goes through when they're selling? Traditionally, there's a lot of steps in that. On your site, does it streamline it, or what is it doing with regard to the process?
Yeah. So typically, this is arguable, but I would say the hardest part is usually just finding the buyer, finding a reputable buyer that will actually transact, knows acquisitions, and we do an exceptional job in terms of bringing in high quality buyers into MicroAcquire. So we solve that aspect. Other things that we've implemented is just making legal doc creation easier. So we've built a letter of intent builder. We're building an asset purchase agreement builder. So streamlining just like the legal doc creation. Also building better tooling around just assessing the financial health of a business. So when you look at a SaaS startup, you might get a P&L, and then you dig deep into that P&L, and it says on first look, this is a really profitable company. It's growing, whatever. But when you really dig in, it could be the exact opposite story. So on MicroAcquire, you can connect Stripe or ChartMogul or Metrics or Google Analytics to get a really healthy snapshot of the business. And then we're also doing things like, what is your startup worth? If you ask 10 people, you're going to get 10 different answers. So we're really trying to bring a data-driven approach to that, using the data that we've seen from the hundreds of acquisitions that we've closed. And really, the product that we're building inside of MicroAcquire, it's such a multi-touch process. There's so many steps: finding the buyer, going through the legal process, going through due diligence, even just transferring assets. Like, how do you transfer, a GitHub repo how do you put that into escrow? Tools like that.
Mm-hmm.
So those are all the things that, we're thinking about and looking to streamline, and more importantly, standardize. I think that's something that the market could really use, because I see all the time where a buyer and seller will kind of get to terms and they're like, what do we do? My process, your process? So
Right.
we want to standardize that to bring, more trust and transparency to the industry, so to speak.
And is there a typical company size or buyer profile that you guys tend to play in?
Yeah, good question. I'll start with the buyers. So we see a very wide array of buyers, everything from the largest private equity groups in the world. So some multi-billion-dollar private equity groups. We've seen acquisitions from venture capital firms. We've seen acquisitions from bootstrap companies acquiring other bootstrap companies. A lot of aggregators, a lot of roll-up plays, public companies as well. So a lot of corp dev teams. And then the largest segment is probably what I'd classify as individual buyers. So these are people where, a startup, typically when you launch it would be, think of an idea, it still is that way, but, some entrepreneurs, maybe they've had a successful exit, a liquidity event at another company, and they're just looking to buy a cash flowing business. So that's another large segment. So we see a pretty wide array. So you can get strategic offers, and then financial offers, and then individual buyers as well.
Very cool. Now, you mentioned this is specifically tailored for software companies, which I get. It makes a lot of sense. I'm sure the legal varies by industry. There's different considerations. Does this apply, down the road or in the future to non-software, to all the other industries?
Yeah, I mean, there's so many small businesses. I mean, the way I'll put this is, the ultimate goal for MicroAcquire, I don't know how long this will take, but we want to be the marketplace where you can buy and sell any type of business. So we're starting with software companies because it's so much easier to do online. Getting financial metrics in terms of revenue and expenses is so easy because everyone's already using and adopting tooling that just makes gathering that info really easy. But let's say we wanted to move into Main Street businesses. A lot of those businesses don't have a P&L. They don't have, accurate financial records. They don't have, knowledge on how to sell their business. And so that's a market that we're definitely eyeing, and I'm excited to enter into it at some point. But right now I'm a big fan of, definitely have a beachhead first to start, build out everything and be completely dominant in one industry. And then kind of like the bowling ball strategy where you go in with one industry and then there's adjacent markets that you can go after second.
So what's the revenue model for this? Right. You mentioned before there's no fees, but obviously it makes money.
Yeah. So I should know we are going to be charging commissions soon, but the way that we're thinking about commissions is there's other marketplaces and there's business brokers and investment bankers that will charge a commission for just listing on their marketplace. But what we want to do before charging commissions is we want to add so much value to the acquisition process that we, streamline it, we make it faster, we make it more transparent, we allow buyers to make better decisions. We help founders in terms of just confidence when speaking with buyers. And we've just rolled out the first kind of, let's call it the first puzzle piece of like 10. So we'll get there in the near term. And the first puzzle piece was, the letter of intent builder, and we just integrated an escrow service. But right now, our only business model is we charge buyers a annual subscription to access the platform. And what I mean by that is, so you can go on MicroAcquire and you can look at all the listings, and they're basically blind profiles. And so what that means is basically it's a private marketplace. You don't know what the startup is, but it has high level metrics of, trailing 12 months revenue, profit, growth rate, annual recurring revenue, tech stack, competitors, growth opportunities, why is the founder selling, all that stuff. But if you want to know what is the business, how do I contact the seller, you would just subscribe to what we call MicroAcquire Premium, which is just $3.99 a year. And then when that happens, we then go and vet the buyer and ensure that they're a real person and they're, legitimate. And that's it for now. But in the future, we'll definitely move to a commission model. But yeah, right now it's kind of the simplistic business model of MicroAcquire.
I love that. Who are the naysayers for this? And what are their objections? What do you hear?
I mean, when I first started the business, everyone, quite literally everyone, everyone
Amazing.
from, yeah, even when I sold my first company, I got light advice from an investment bank, banker. It was just a friend. I just would, call him for phone a friend questions. And I floated this idea behind him and he was like, there's just no way. So investment bankers, business brokers, yeah, I mean, everybody. But today I would say, that's a good question. I mean, I would say probably, the incumbents in the industry are probably the biggest naysayers.
Those are the bankers and the brokers, or?
Yeah. So probably the people that have been, the typical routes for people to sell their startups. But it's definitely, naysayers have decreased. But I think, if you're building a business and you don't have naysayers, I think that's kind of a red flag. You always want to have, I always want to hear feedback from both customers, investors, users, friends, like what sucks about the business and like what they think won't work. Because that's stuff that I can use to, improve the business. If everything's perfect, then it's like, okay, well, that's not very helpful. I'd rather know what. So I kind of like the naysayers. And another thing I'll say about naysayers is it's my personal favorite motivational fuel for building a startup.
It's a dangerous concept, not listening to the naysayers. When I was starting out as an entrepreneur in my 20s, I was a bad entrepreneur. I'd heard somewhere along the line, you can't take no for an answer. And I would just kind of keep running into brick walls over and over and over and over. You figured it out. So what's the fine line there between, how do you know when a naysayer is wrong and when you shouldn't listen? And how do you know when a naysayer is right and you should go back to the drawing board?
That's a really good question. I would say you got to look for pattern recognition. I mean, at the beginning, I think with any startup, you gotta believe when others don't believe. Like you just gotta have unwilling belief in yourself. And for MicroAcquire, this business for me really isn't work. It's like I describe it as like my video game. My job is to help people sell their business for, life-changing amounts of money. And we don't benefit from that. We just add so much value to the startup community. And I get to look at interesting businesses all day long. So, that part's really rewarding. But in terms of, when to listen to naysayers and when to maybe disregard the feedback is, I would say, if you hear the same thing over and over and over, I mean, there's some truth in there somewhere, but you know, that's probably where I'd land is, you want to look for pattern recognition. If everyone's saying like, hey, this isn't going to work, after you've started, into the market, um, you know, take that as maybe truth and then prove that wrong. So that's probably how I would think about it. But that's a really good question in terms of, the balance of you don't want to listen to every naysayer because if you did, you just never get anything done. Because everyone would just say, this isn't going to work for this reason, or this isn't going to work because this other person tried starting this company. And that may be true, but, things evolve over time, such as, the market might be ready for whatever solution you're building. A number of other factors. So I would just say, pattern recognition in terms of, how often are you hearing it? And then how does that compare to the people that support you? Are there more naysayers and supporters? And then balance those two.
I think for me, and I think we're saying what you're saying and a little spit on it. What changed for me when I went from kind of being a bad entrepreneur to a fairly decent one was realizing that when I had the naysayers, they were saying there was a wall in front of me, but they weren't saying that the deal was impossible or the venture was impossible. They were framing the experiment I needed to do. They were saying, even though they didn't know it, they were saying, hey, this will never work for that reason. And then I would start setting up, once I got better at this, I started setting up experiments to test those things. The idea of determining whether or not they're right. Because I couldn't tell the difference between the naysayers who are correct and who are wrong. So for me, it became, they become kind of a light bulb, a flashlight to help illuminate the opportunities for experimentation, to test things, to figure out if the model is right. So I do think they're a useful part of the process. The problem is when I was first starting as an entrepreneur, it was really disorienting. I just thought I was supposed to not listen to anybody. But the reality is there was some wisdom, even if they weren't right. They were at least telling me what to test. Does that resonate with you or?
Yeah, I couldn't have said it better myself. Because usually when you get a naysayer, it's, the best naysayers are very specific. Like it started with, how are you ever going to get a startup to list on a marketplace? Like they have these options to sell. Okay, so that's the problem I need to solve. And I went and solved that problem. And then the second problem is, okay, so how are you going to, get buyers on this platform? Okay, solve that problem. So I think the way that you're framing it is, I couldn't have worded it better. And naysayers can sometimes point you in a better direction than supporters because, supporters are like, hey, this is awesome.
Right.
But a naysayer is saying, hey, I think you got to really think about this problem in this business, or I've seen a similar business and they have this problem. So, varying the degrees of, from a naysayer of this will never work. That I'd probably, use that as fuel. But when it gets specific in terms of like, for these reasons, you're right. Those are just, barriers that you need to overcome.
Why did you start this? I know you had been through the venture and people called you, but a lot of people have sold companies and a lot of people have received those calls and not done anything about it. Why you?
I just felt the startup ecosystem needed a marketplace to easily find buyers, to easily go through an acquisition process with much more efficiency and innovation than we see today. And when I looked at the market, so here's a story of when I first started MicroAcquire. So I always, I started with the customer. So I'm a big believer that the founders that go the distance are the ones that truly love what they do, and I think that needs to start with the customer, because you're going to be talking to them a lot. So MicroAcquire's customers are entrepreneurs and startups, and I'm like a startup junkie. Like I love startups. I've been building startups since I was a kid. When I say startups, I'll count like an eBay store. But
it counts as a kid. It's proper.
Yeah. Yeah. But I looked around the market and I just didn't see anything that was specific to, software companies, specifically SaaS. There's no marketplace for SaaS. The typical routes to sell your business were really cost prohibitive to a lot of smaller software companies. So let's say you're doing, 5 million in revenue. That's generally too small for an investment bank to take you on in most cases. And that's generally too small for a strategic to get really interested. And just even finding those buyers is extremely difficult. And it took me 3 years to find, the buyer for my first business. So I just saw a large market, zero innovation, low NPS. And when I say low NPS with the current options, if you work with a business broker, you're going to be paying, up to 15% commission, which is like a small angel round. When you get into numbers with investment banking, you move towards, Lehman scale of like 2-3%. But on the lower end of the market, I just saw, just this huge opportunity to innovate, to educate, streamline, and just kind of consolidate the entire industry into one place, so it operates more efficiently. And that got me super excited. This is an opportunity to not only, I think, do a lot of good for entrepreneurs, because this is going to sound kind of cheesy, but when you start your first business, I kind of believe it's like for purpose. What I mean by that is, most entrepreneurs just want to be, financially secure or whatever it may be. That's just my personal belief. Like a lot of entrepreneurs swing really big on their first shot, and really they'd just be happy with, an outcome that makes them financially secure. And so, that was my goal with my first business. And I was fortunate enough to get there. And so this business was more of a passion business where I would run this business for free. And I did. I ran this business. It was just me for about a year and a half, doing everything from customer support to vetting the listings, to writing the newsletters, to managing the product, getting on podcasts like this, just because I enjoyed it. And then after going through a year of that, when you go through a year of that and you aren't stressed out, you aren't, sweating it, like that's when you start to realize like, this is the business I want to work on for the next decade. So I hope that answers your question.
That's awesome. Why now? Is there any particular thing about the timing other than it was the right timing for you? Anything with the pandemic or recessions that kind of played into this?
Well, we definitely saw some good market tailwinds in terms of, there's never been more M&A activity in the last 2 years than ever. So, I always say when you think about a startup, you want to make a non-obvious bet that's obvious to you, that's going to become obvious over time. So I love that. Growth through acquisition was going to be a trend, or entrepreneurship through acquisition was going to be a trend. And I made a bet on that early, and it panned out. The second point I would make is in terms of just the amount of startups being created. I mean, if we just do the numbers, less than 0.5% of startups raise venture capital. Out of those, I believe it's like, let's just call it like, around less than 1% become a unicorn startup worth $1 billion or more. So there's, millions of startups being created, not just in the United States, but globally. So MicroAcquire is, facilitating acquisitions now in, I believe, 50 plus different countries. So that was kind of like the bet I made, where startups have been democratized. People are going to be foregoing venture capital and really just looking to build, sustainable, profitable businesses. And I was right to some extent. And so I think we're seeing this new style of entrepreneurship being created on both sides, where people are, happy with hitting, singles and doubles. And I think that's great. And I think it's amazing when people, swing for the grand slam as well. I think entrepreneurship on every level is fantastic. But I think, why now is just the trend of, larger companies growing through acquisition, and then other entrepreneurs entering entrepreneurship by actually acquiring a company instead of just starting one and thinking of an idea and hoping it works, kind of chewing glass for 2 years, trying to find product market fit. You can accelerate all that by just buying product market fit, essentially. So those were the two bets that I made. And then, like with any business, you need a little bit of luck. And, I think, I kind of just timed it correctly.
I feel like when everyone's going through life and working through their careers, when they're looking out the windshield at the future, or real time as it's happening, it feels like you're driving down a windy road. But in hindsight, when you're looking out that rearview mirror, that road can look pretty straight, kind of linear, a path. What is your background? How did you end up being the guy starting this to build a platform to help entrepreneurs around the world?
I mean, I would just probably go to my childhood. I've been building businesses literally since we should probably classify businesses as, again, eBay store counts as one if it does.
Right. Ventures of some sort.
Yeah. I've always just been, a big fan of creating businesses. I was just that weird kid that just was, when everyone was, collecting baseball cards, I was selling them. I started a company in college. I went into college. I went to TCU Chico State, also known as Harvard of the West. And that's a joke if I was not catching that. And my goal was, okay, I got 4 years to start a company. Like, that was my only goal. I knew that, my personal ambitions of where I wanted to go in life, getting a job just wasn't the route for me, not just financially or anything like that, but just, I knew I wanted, like some kids grow up wanting to be, the quarterback of a football team or whatever, or professional baseball player. I knew pretty young, and, if my mom did a cameo on this, she could confirm it, but I openly said I wanted to be the CEO of a company. I wanted to be a business owner. I loved, that was my sport. And so I entered college and I had 4 years to figure something out. I ended up going 5. And I'll give you a little tidbit on that. But short story there is, entered our entrepreneurship business plan competition every single year. I got 4th, 3rd, 2nd, and then finally 1st with a business called Business Apps, spelled BIZNESS Apps, which was a drag and drop no code app. And I started that business because I had a job board before that connected mobile developers with businesses, and I kept seeing the same job posting over and over and over. And I was like, there's these, do-yourself website builders. Like, what if there's this do-yourself mobile app builder? And I was in a college town where, every bar and restaurant and, pretty much every business was trying to connect with their customers on their mobile devices. And I built a simple template and made it really easy for me to customize it. It was super it was like an MVP that would like make you just cringe if you saw it. But it started with humble beginnings where I just, I was thinking, okay, maybe I can make like an agency where I have 50 clients and I charge them $50 a month. I don't have to get a job. That was literally my only goal. I just wanted to be, in control of my own destiny, so to speak. That business, took off a little bit faster than I could have ever imagined. And the ironic part of the fifth year story is I minored in entrepreneurship. And I did that so I can get financial aid and so I can pay for, rent and stuff like that. Didn't go to any classes, but focused on the business. So it kind of lowered my GPA, but I came out of college with a pretty fast growing startup, which was nice. So, I mean, I would say just, I've been an entrepreneur my whole life, and just helping entrepreneurs is just extremely rewarding for me.
Now, you sold a company before. It was business apps, right? Was your company you went to A to Z on. Is there a story with that you think was kind of like moving for you, or an experience you'd want to share with folks?
Yeah, I actually wrote a book about the whole experience because I knew it was so weird. Because I was 21, and just to give you some, and I gotta say, this was like one of those businesses, like right place, right time, ginormous market, obvious problem, obvious solution, and I just got lucky. Obviously, luck is hard work time matched which with preparation, whatever the quote is. And I worked my ass off for sure. But yeah, we grew from 0 to 5 million in the first 3 years, or first 4 years or something like that. We only raised $100,000 for the business. At one point, we were creating more mobile apps than any other company in the world. So to give you some idea of the scale, is when we would do the math, every quarter Apple would release reports like how many apps that they uploaded, and we would just kind of divide by how many apps we uploaded. And at one point, we were supplying 5% of all the apps into the iTunes App Store. Wow. And the cool part about how we did that was it wasn't even my idea; it was a customer's idea. Because selling one app to a small business at a time is an extremely grueling sales process. And there was, and I'll never forget this moment. So this was, I've always been a solo founder, and I remember being alone in my office when it was me just trying to cold call. I think I was cold calling like restaurants, and I'd call and be like, "Hey, what's your mobile app strategy?" And they're like, "App? Like, you mean appetizer?" No, this is a true story. And there's this individual that built like 4 apps for these really nice hotels in Switzerland, Ramada hotels. And I gave him a call I'm 21, I'm young. And so I'm thinking this guy's very successful. Maybe he has some advice for me. And so I just kind of talked to him, and he quickly tells me like, "Oh no, I don't own the hotels. I have a marketing agency." And so my second question is, okay, how can I help you sell more apps? Like, this is incredible. And he gave me this advice that changed the trajectory of the business forever, where he just said, if you could white label the product where I can put my company's branding on it and then present this to my clients as a semi-custom app, I could sell hundreds of these. So from that day, we went from selling one app at a time to hundreds of apps at a time. So we'd have these partnerships with web design agencies all over the world. And then we ended up partnering with a couple of public companies, all the do-yourself, SMB type companies. But that allowed us to keep our ability to, I guess, put another way, we didn't need to raise additional capital because we had this global sales force that was essentially paying us to sell our product.
Yeah.
And yeah, we were able to scale the business really quickly, and then just to kind of cap that off, exited the business when I was 29 to a private equity firm.
That's awesome. But you had mentioned before you had been starting companies from a lot younger. of an age. This wasn't your first go. Tell us about the skateboarding competition.
Oh gosh. So it wasn't. So it wasn't a competition. It was a petition. So if you Google Andrew Gazdecki skateboarding on YouTube, there's a few videos where you can get the fuller story. But long story short, I grew up in San Clemente, and it's a beach town. You know, surfing and skateboarding is kind of like the sports that everyone's into. And my principal in junior high wouldn't let me ride my skateboard to school, and he would give me detention or whatever. And so I remember standing outside of like the local grocery store, and I gathered like 700 signatures or something like that. And then one of them was like a news reporter for the local San Clemente newspaper or something like that. And then the next thing I know, the LA Times is calling, and like all these news shows. And then I was on the Dr. Laura show. It was like my 15 minutes of fame. I always joke saying like, you know, it was my 15 minutes of my fame. My life's been downhill since then. But yeah, I made a petition to ride my skateboard to school because I was so angry at my principal for not letting me. So that maybe gives you a little bit more insight into my personality. I've always kind of like, you know, looking at things and being like, why is it like this? Like maybe it should be a little bit different. You know, so that was a fun time.
Hell hath no fury like a frustrated founder. Look out.
Yeah.
So now you mentioned you tend to be a solo founder. That's your move. What advice do you have for folks about how to do that well? Because a lot of people don't want to be a solo founder. You know, these roller coasters have highs and lows, and having someone else to be there to support you is a very helpful thing. What has worked for you?
Yeah, I mean, I gotta give credit to my wife for sure. She is kind of the secret co-founder in like everything I do. Like just before this podcast, I was talking to her about it. I was saying terrible things about you, Mark. No, just kidding.
And she was telling you to do it anyway. That's what you're.
Yeah, so I met this wonderful Italian lady in college, and you know, I remember coming home to our apartment and telling her about business apps. And, you know, she's very business savvy. She owns her own recruiting firm. She's also an entrepreneur. So I kind of have a little bit of, you know, an advantage there in terms of it is hard. And you do need to, you know, just vent and sometimes just like brainstorm and just, you know, it's Friday night and you just want to talk about the business and like being able to just kind of openly share your thoughts. So it's tough being a solo founder. I don't recommend it without any support. But for me, I just generally move quicker. And I would consider myself a pretty decently rounded generalist where I can manage sales teams. I can do sales calls. I you know, can market a business. I know how to manage product teams. So it's tough. It definitely has its you know, drawbacks in terms of you're doing all the work instead of splitting the work. My wife's not like helping me build MicroAcquire or anything like that. She's giving me that support piece. But I mean, if you are a solo founder, I think other things that worked really well for me was like with business apps. I had two angel investors. One of his names was Christian Friedland, and he was like almost like a dad to me. He did make a lot of angel investments. He maybe made like 3 or 4, and he built a company called Build.com. It's basically, think of like Home Depot online. They do a couple billion in GMV per year. And the guy is just a brilliant entrepreneur, and we got along really well, and we talk on a near daily basis. So, you know, if you don't have a co-founder, I highly recommend getting, you know, a mentor that's going to be there along for the ride. Another thing that's worked for me is a CEO. So I work with a CEO coach. His name is Tim Porthouse. I met him through a peer CEO group called 10X CEO. So definitely, you know, huge advocate of, when you build a startup, it's a decade-long journey, and the more people you can put in your corner, I think the higher your chances of success are going to be. So my decision to be, a solo founder is mostly around I just like to go, I have an idea, I just start working on it immediately. And I'd say that's probably one of my biggest strengths and biggest weaknesses is I'm a terrible planner. If I have an idea, it just comes out and I just go. So.
Okay, interesting. So that's kind of your background, how you got here. But I also want to spend a little bit of time on the M&A process while we've got someone living this, because I think there are a lot of people who are trying to figure out how to navigate this. I've sold a handful of companies, wide variety of outcomes, and seen in those different outcomes different processes. I just wrote a post on Benzinga that was about some of the things I learned last year. And I feel like I'm constantly learning on the M&A stuff. And the irony for me is I used to be an M&A consultant, but it's very different doing the consulting work and being, on the cap table trying to go through a process. It's just a different machine, different set of things you have to manage. Now that you're knee deep in this, I mean, you're probably seeing more M&A processes than arguably just about anybody else. Could you give us some basic architecture and kind of how if you were to do like a 101 on how an M&A deal works, what are the basic stages that people have to go through to prep, market, and get their company out the door?
Yeah, definitely. So it depends on the size of the business to start. But obviously, the larger the business, the more complex the process is going to be. But the general process is number one, figure out what is your ideal outcome. If you have a good business, you might have multiple options, and figuring what that is can really help kind of narrow down, your buyers, or at least be really upfront when you're speaking with buyers. And then number two is just, being prepared and taking, the acquisition process seriously. And what I mean by that is have, a proper, deal book put together, put everything in a data room, put together, a sim. And some of these sims that you put together, like the ones that we put together at MicroAcquire, can be 50 plus pages long. And then once you have all that prepared, you're going to want to do some buyer reach out, where maybe there's some strategic buyers that you think will be an ideal fit for your business. Those are usually harder to land just because you're literally interrupting their, whatever initiatives they have. So also include financial buyers, which is typically, a private equity firm. But I think, the biggest misconception that entrepreneurs have about getting acquired is, companies are bought, not sold. I think I would argue that term is not true unless you're Slack or something like that. You're growing like crazy. If Salesforce doesn't buy you, someone else is going to, like, if you have a lot of leverage. But for a lot of other startups, you really do need to sell your startup. You need to map out who potential buyers are. You need to prepare in advance. You need to have a basic understanding of what is due diligence. What are the questions you're going to ask, and can you prepare in advance so when those questions are asked, you can answer them promptly. And then also having people in your corner that can help. That can make all the difference, like proper legal representation. If you're completely unsure of what to do, you can hire an M&A advisor or an investment bank to help you run the process. But yeah, I mean, if we went from like step 1 to like step 5, it's get prepared. Once you find the buyer, you're going to move into typically light due diligence, and your goal there is really to line up buyers, and you want to have typically what I would recommend is like a time process. So for example, you say, I'm going to be taking calls up until this date. I'm going to expect either LOIs or IOIs until this date. And an LOI, for those who aren't familiar, is just basically, a non-legally it's like a term sheet. but to buyer company. And then from there, you figure out which LOI makes sense and you move forward with that. And then you move into due diligence, which is basically like getting audited by the IRS times 100. It's not fun. It takes sometimes months. But when I was going through due diligence for my first company, I got the best advice. That was, hey, this sucks, but just think of, if you just calculate, the hours in terms of what you're going to make, just keep going. So that's kind of like the high level overview. There's so much nuance in terms of, are you going to be staying on with the business? Is this going to be to a strategic where it's an all stock deal? Are you staying in the business at all? Are you looking for an all cash buyer? There's so many different factors, at play, but those are all things that, we're trying to help with at MicroAcquire, is really just taking that process and just streamlining it. So it's kind of like a step 1, step 2, find your buyer, gather LOIs, move into due diligence, sign a stock purchase agreement or asset purchase agreement, transferring of assets, escrow, and then close. And then there's 1,000 other ways to do that. But I think the more that we're able to streamline it, will just make the process easier for both buyers and sellers.
How long is the process typically?
On MicroAcquire or just in general?
Well, maybe you can give us a compare contrast.
I've seen, well, it'll be interesting to see how things go over the next, let's call it like year or however long, the markets are seeing some volatility, but I've seen acquisitions happen in 2 weeks, like from like LOI to closing to cash in the bank. I think that's a little fast and loose. But I'd say typically, expect like 90 days. That's like a good process. If you have time, I mean, the more patient you can be, depending on what your ideal outcome is, the better. But I would say probably about on MicroAcquire, anywhere from like 30 to 90 days is pretty normal. But for me, it took years. So it just depends, especially on the scale of the business, because as your business gets bigger, so does your buyer pool get smaller. So if you're out there trying to sell $100 million company or $1 billion company or, a $10 billion company, your buyer pool is very, very, very small. And so it might take years to build relationships with those individuals, unless you price it super, super cheap.
Some of the processes we've been through were typically about 6 months, which was a lot longer than I had expected. But there was so much diligence being done, and there were so many layers of conversation. I think one of the things that shocked me most about the M&A cycle was I kind of didn't understand until I'd been through it a few times that the tail end of the M&A process, when you've got a counterparty and you've got a medium-sized or bigger company, every contract, which is like the connective tissue in the company, it's like the tendons and the cartilage of a body, ends up at some level getting renegotiated or twisted or tweaked to make sure everyone's going to be happy working, lined up to be part of this bigger entity. And it is an arduous, thorough, painful process. Just the sheer volume of it. Most of it's not that high friction. It's just the volume of it is crazy. So that was the surprise for me in going through it. Is it took us 6 months in a couple of them. But yeah, I think it probably had to correlate it more with the scale of the operation being sold, the number of people on the team, the number of customer contracts, things like that. Everything had to be retooled.
Yeah, I mean, on MicroAcquire, I haven't seen like 100+ person company get acquired yet. But yeah, that sounds about accurate, because you're essentially combining 2 companies and you have to have everything sound and stuff. So
who works for
that
who,
makes complete sense.
Are people in the similar comp tiers, but you have to align those between the companies. It's just a lot. I loved what you said before about companies, the adage, bought not sold, not really applying. I think the subtext of that phrase historically was You make a lot more money when someone's chasing you to buy your company than you do when you're trying to shill it. But I wonder if that phrase came or was kind of manifested before there was a really institutional market of people and firms buying companies. I mean, there's so much private equity money out there. There's so many firms where they have to buy something, or they're not doing their job, or they're not going to put up generate yield for their investors. So there's a real motivation for people to make smart investments and buy companies, even if they've never heard of you before, or you haven't developed that relationship. That may not have been the way it was 20 or 30 years ago, 40 years ago, before the private equity industry was so developed. Just an interesting side note. I hadn't clicked until you said that, but I think that might be a phrase from before the sophisticated private equity market was developed.
Yeah, I can say that with 100% certain. Even, just thinking about like 10 years ago, or even 5 years, even 3 years ago from where I sold my business, when I was approached by the private equity firm that bought my business, I didn't know too much about private equity. I didn't know how many of these firms existed. But I can tell you there are legitimately hundreds of them, if not thousands, with huge balance sheets. And you're correct. They are all looking to buy pretty much kind of the same thing, at least from my vantage point, which is just, high growth SaaS companies. So it's definitely a really, really good time to be a founder, because your options for exiting your startup are just increasing exponentially. And that wasn't there 5 or 10 years ago.
Yeah, and really interesting macro trend on this. I think in tech, private equity didn't really touch it in the last 20 years ago because the business models weren't well understood. Right? VCs tend to invest in growth, and PE shops tend to buy cash flows. They want steady cash flow, and they can work some financial engineering and value add to the company, and they can make a buck on it. And I think tech was just perceived as too risky, growth oriented. People didn't know, there wasn't standard metrics and KPIs and understanding of business models. And that's shifted. There were some firms that pioneered in, I want to say, first decade of the century, firms like Silver Lake and others that came out and kind of planted a flag saying, hey, we can do this steady cash flow game in tech because there are steady cash flows. We understand these business models. They are predictable. And since then, I think it's proliferated. So that the world of opportunity for founders now is different. I think we're not going to see them buying the breakout companies and venture portfolios. Private equity buyers are known for not paying the highest price if they get no bake-off with a strategic, another company, or the opportunity to go public. But the middle of venture portfolios, bottom, there's going to be a lot of opportunities. And I think we're going to see more founders finally merging with their private equity counterparts, whereas these two industries have kind of been running in parallel for a long time, but not doing a lot of business together. So it's kind of exciting. I think it's going to put more money in entrepreneur pockets, help more people fund new entrepreneurs, accelerate the whole machine. And in the process of doing that, help the private equity folks do better with their performance. So I think it's actually a pretty interesting crossover moment. I think it's going to have big impact on the broader economy.
Yeah, I completely agree. I mean, like I said before, just the amount of private equity firms being founded and, deploying capital, especially, it'll be interesting to reflect on, what this next year looks like. Because there are going to be some companies, like you said, where, they're not going to be able to reach that strategic multiple. And private equity is going to be probably the buyer of those businesses. And that's not a bad thing.
That's great.
You are correct in terms that financial buyers almost always pay lower than a strategic buyer, but they're in the business of buying companies. So when you go to market to financial buyers, I've seen deals that are all cash, walk away from the business in 30 days, quick due diligence. Like there's also been kind of a trend in terms of, just like with venture capital, maybe compared to 20 years ago, when we think I was making eBay stores in the 2000s, but I think, venture capital has really, become, a partnership business with founders, and,
Totally.
you get these great investors that really help your business. And I think I could see that becoming a trend with private equity, where maybe they take, more small bites first in terms of, partial buyouts, and then full buyouts later on, making it, kind of a more founder friendly, process. That's already starting to happen. But I can see that becoming kind of like the industry norm over time.
Yeah, two comments on that. One, I definitely want to be clear. I don't think private equity exits are bad. They just tend to be not as high as the strategic, but they're still great for the founders and people do very well. But two, yeah, I think you make a point that I hadn't thought about. There's probably, through these two oceans kind of colliding, going to be some real innovation in the private equity model. Real opportunity for that. Just shifting back to kind of some knowledge share for folks listening, what are the top 3 things you would suggest someone remember or do? Top 3 tips for selling a company. You've seen a lot of this stuff now. What's some wisdom you could share with folks?
I mean, it's all pretty basic, but also complex at the same time. And I think it all comes down to, the top 3 is, number one, again, I'm assuming your business is, let's say, under 20 million. That's kind of what I see the most. So I don't want to speak to above that because I don't see it that often. But be honest, be very transparent with your business. I think bring your business in front of buyers with warts and everything. If you haven't raised your pricing, if you haven't tapped into certain ways to grow your business, be honest about why are you selling. Understanding that this isn't just like buying a car where you just hand the keys and you're gone. So the more that the buyer trusts you, and obviously that's going to come out. It's really going to come out in due diligence. But I'd start there, just being honest, being upfront with really what you're looking to accomplish, and then being prepared in terms of just like with anything, is the more prepared you are, the more serious you appear to specifically financial buyers and also strategic buyers as well, because people. Corp dev people and people in private equity, they look at deals all day long. And so, the more serious that you can appear, you're going to make them feel like they're not going to waste their time if they really start digging in. So I would say, be prepared, have a data room, have a clean, 3-year P&L if you have one available. And then also just, be prepared in terms of, understanding, what to expect in due diligence, what to expect through the legal process. How are you going to find these buyers? MicroAcquire is a decent way.
Sounds like you could help on all of those fronts, the training as well.
We can. And another part about MicroAcquire too is, if you need an M&A advisor, or if you need an investment banker, or if you need someone to help you with, like, what is your company worth? We have a directory within MicroAcquire where you can hire these people to help, all the way from legal counsel to tax planning and everyone involved in M&A transactions. So I would say build your bench, be prepared, and just be honest, and just understand what your startup is worth. And then in terms of, when you're actually speaking with buyers, don't be afraid to walk away. Like, the person who wins in negotiation is the person who cares the least. So a buyer is always going to be looking for a way to, devalue your business, just because, everyone wants a deal, so to speak. So if you have a certain number in mind and you're not going to deviate from that, and it's a realistic valuation, stick to that. Unless it's like 10% lower and it's, going to be a great outcome, and that extra 10% isn't going to materially change your life. But that'd probably be my top 3. I know it's pretty basic, but I think the basics are usually the most important.
Totally agree on that. It's good advice. What do you think your industry needs? Right, you're out there putting together a lot of the pieces of this puzzle. What are you not doing that you hope other people will kind of pick up the slack on?
I would say just more innovation. I think really with acquisitions, just there's so much that we can do in terms of using data to help startup founders, really understand what their business is worth. And, sometimes, it isn't 100 times annual recurring revenue. That's just not what the market is currently paying to acquire your business. Standardization across, legal docs. Like I think, one of the most interesting documents that has, been created for the startup ecosystem is the SAFE by Y Combinator.
Mm-hmm.
That's been used by so many different founders to raise capital. Standardizing, an LOI, or standardizing, a stock purchase agreement or an asset purchase agreement, and really just kind of streamlining that whole process. I think that's kind of what's needed to really help a lot of different startups get acquired. And then, my hope with MicroAcquire is we obviously do work with a lot of sophisticated buyers, but there are a lot of people that are, really starting to get interested in entrepreneurship through acquisition. And I think we have the opportunity to, educate and empower people on both sides, which could potentially unlock, hundreds of millions or if potentially billions of dollars, if we're able to create, a flow that builds trust and confidence and helps, both buyers and sellers every step of the way of the acquisition process. So, long story short, I would say just, more automation, really streamlining things, standardizing things, and just making things a little less confusing would do the industry a lot of good.
We're big believers that entrepreneurs are the driver of a lot of social change. So what you're doing is important. It's helping people kind of streamline, get more done faster. So anyway, thank you for being on, Andrew. Grateful for your time.
Yeah, thanks for having me on, Mark.
Andrew's got a big mission at MicroAcquire. Obviously, I'm super pumped about it. I think this is exactly the kind of thing we need to help moving society forward. Some brief housekeeping. I'm heading off for vacation next week, little family trip with the kids. So look for the next pod coming out in 2 weeks. And here's my pandering. If you like what you heard, please hook us up with a like or a 5-star review. And feel free to share with a friend. And you can find me on Twitter at MPD. And to hear more of my conversations with innovators, you can subscribe on YouTube, Facebook, or any major podcast platform. Just search for Innovation with Mark Peter Davis.